And we are live. Drew Meredith, how you going?
Very good. Good to be here as always.
Okay.
Big finish to the week.
Big finish to the week. Why is that?
Cup week down in Melbourne.
Cup week. Yep. Did you go?
Sun and the rain were out yesterday at Oaks Day, which was beautiful. Nice sunny morning for anyone that lives in Melbourne, and then it was pouring rain, windy.
Yeah, it was
by
too.
5 or 6 o'clock.
So
beautiful week in Melbourne, though.
Beautiful. And yeah, you look like you got a bit of sunburn there, mate.
I did sunscreen at least once.
Yeah, right.
Maybe not twice.
To keep it sensible here on the Australian Investors Podcast. True or false? Donald Trump would be richer if he just invested in an index fund.
When?
I don't know. When he got his inheritance.
When was that?
I don't know.
Yeah, I'd say no. True. I mean, false.
Well, this is an article in 2022. Forbes set the record straight. There's been a lot of back and forth, but as stocks ripped in 2021, 2022, turns out he would have been wealthier had he just invested in the index fund. So that's according to
his filings.
Forbes data.
But all of his businesses are private businesses, aren't they?
Yeah, I mean, who really knows?
Who really knows what he's worth?
Who knows?
And maybe he never would have become president if he just invested in an index fund. It wasn't a property developer.
Yeah, imagine. Yeah. He wouldn't have had Trump Tower. Maybe
just be wealthy and not need the job.
Yeah. Is there something to be said though that you shouldn't invest in just index funds if you get wealthy?
If you want to get, or if you are wealthy.
If you are wealthy.
Yeah. It is nice to not always be exposed to what's happening in the market, I'm sure. And it seems like he's prone to quite emotional decisions. So investing in index fund can be a pretty wild ride from time to time. And you have to be pretty patient to keep up with it or stay with it.
Were you surprised that Donald Trump won the US election?
No, I think we spoke about it last week, and we both thought it wasn't our view that he should win. We'll be clear on that. We're not going into political areas.
Sure.
We can if we want to, but it wasn't necessarily a surprise. I think all the polls were saying that Trump was going to win, and I think in Australia we get only some of the picture and forget how big a country America is, and as bad, maybe not as bad as it is, but essentially Republicans are pitching at this idea of lower regulation, so the government being less involved in your life, and that seems to resonate with a lot of Americans.
It does, mate. Good, bad for the share market.
Good. I mean, it's just ran. It hit another all-time high. I can't remember. I remember the last time we were on here, it was 44, 45. I think it's hit a 47th all-time high this week.
Yeah.
Just overnight. And then you had the Fed come out at like 3 a.m. this morning and announce a rate cut at the same time that Jerome Powell was being asked by Trump to quit his job as the chair of the Federal Reserve.
Why was that?
While issuing a press release that said he likes Jerome Powell as the Fed chair. So we're back. We're back to politics by Trump.
I mean, yeah. The thing that a lot of people Google after someone becomes a leader of a country is winners, losers.
Yeah.
So investors may be winners, because I have been doing what most people do and just read the headlines. And a lot of the reporting suggests that obviously Trump is pro-business.
Yeah, definitely. I went through, we were going to record something for Waddle a week or two ago. It's obviously too late now, going through what the impacts would be. But basically, Trump's policies are pretty straightforward. They're pro-growth and pro-America. So he wanted to cut the company tax rate from 21 down to 15. He was talking about cancelling the Inflation Reduction Act, which is like the Green Energy Investment Act. And then, like he did last time, and like a lot of governments have done, is increase tariffs on and protect America against Chinese and cheaper producers, and just lift that again. So that's that protectionist or patriotic, as you'd probably call it, policy. One
of the things I've thought about is, do you reckon that type of, do you reckon that would ever have implications for Australian investors, or just Australia as a country? Do you think?
The biggest impact, I think, overnight was probably in currency, more so than markets. Like, markets will continue, companies will continue to evolve. There'll be winners, there'll be losers. But what's the trajectory of like interest rates or currency? And the Australian dollar had been rallying quite a lot until last night. And it's seen, because it's pro-growth for America, it's seen as kind of a negative for the Australian dollar and money flooding back into America.
Go on.
But none of it's short term. Like these, you'll see some shifts in the short term, and I think there's a few groups that have sent out updates overnight. But essentially, it's a continuation of, hundreds of years of
Yeah.
of government, and companies are going to do what they're going to do anyway. They always adjust to whatever the framework or whatever the leadership is. We've seen that regardless of whether it's a Labor or Liberal government in Australia.
I do remember though, in his first term, he did cut the corporate tax rate, which had a huge impact on
boost to
companies.
earnings, yeah.
That was, some companies had effective tax rates of 13%.
Yeah.
When you compare so the effective tax rate for people playing along at home is there's the official company tax rate, or there's like your official personal income tax, and that might be 40% for every extra dollar or something. But when you blend it all together and you get all the offsets and all that sort of stuff, we call it an effective tax rate for companies. And in the US, that was really low. I remember looking at PayPal as a company and thinking, wow, its tax rate is like 14%. That's super low when you compare to Australian companies like domiciled and taxed in Australia. Sorry, BHP. What the actual tax rate would be.
Yeah, it's like 25. And I mean, it's a constant focus, and it's like Liberal governments here, I think, will be trying to cut tax rates as well. But we're at like 25 to 30%, depending on your size in companies in Australia. That's a massive free kick for US companies. And it did give a big jump to earnings, but it was like, essentially it's a one-off, because then it gets priced in and your PE multiple is adjusted for the increased earnings that are coming from lower tax.
Yeah.
But outside of, I think the biggest, most interesting one, and I'm sure there's some conspiracy here, is that Elon Musk spent something like $130 million supporting Trump. So it's a matter of whether Elon's going to get any benefit, or Tesla's going to get any benefit from Trump in the form of, maybe it's more subsidies, maybe it's more incentive to keep up production at home, rather than, at the moment, a lot of Teslas are being produced in China.
They are indeed.
Yeah.
But that could be one of the things that that a business owner like Elon is worried about. Let's just assume that, for the purposes of this, that he is doing it because he's got pro-American spirit in his veins.
Yeah.
South African. But let's just assume it's that, and not the fact that he's got all these business interests around the world, that in order for them to be a super success, he needs America to be a
strong
success.
Yeah.
Obviously Tesla's facing huge competition from the likes of BYD coming out of China with cheaper electric cars, potentially, in some respects, maybe better batteries. I know all the Tesla Illuminati is going to hate me for saying that, but there is competition.
Yeah,
I am one of those. There is competition, and so there's a real threat there. But I mean, I think Tesla's got nothing to worry about. It's got the chargers, it's got the infrastructure, it's got the name,
and their software. Like, as far as my dad has a Tesla as well, as far as I understand, and all the experts you talk to, Tesla is like Apple in terms of the software and the environment.
Incredible. Yeah.
I was reading, is it John Addis's book?
Oh yeah, you were reading it on the beach. I did.
Yeah, finished it.
I did see a
finished it in an afternoon.
Did you really?
Yeah, it was quite an
like
easy read. I'm not a speed reader either.
Tim Ferriss wannabes.
It's just really easy to read.
Read back to front and upside down.
I'm reading Die with Zero, and it's a little bit harder to read. But
so you've read that in an afternoon?
Yeah,
it took me 3 weeks, and I got through 2 chapters.
Credit to John. It's quite an easy read.
It is very easy to read, isn't it?
But the long reference there was that he was talking about, I believe he was talking about Apple, and when Samsung was launched, everyone thought Android devices would outnumber, and they do outnumber Apple significally. But Apple makes more money, and they're extracting all the profit, because when you buy Apple, you buy convenience, and you buy the ecosystem that runs around it, and that's what Tesla is going for.
Yeah, because at the time, he did reference in the book that at the time, Samsung and Android was just annihilating Apple in terms of the number of units in the market, and their narrative was market share, but also Android will eventually monetize.
Yeah.
But Apple was happy for them to take the bulk of the number of units.
And low cost.
Yeah, but they didn't want that. They wanted mostly Western countries. They wanted mostly people of financial means,
premium,
to pay extra, because they knew that customer would ultimately be worth more.
And that's what Tesla's go for. And it's a good way to create brand loyalty and grow a business over time.
Is Google dead?
Google search?
Yeah.
Yeah, I think it will be within 5-10 years.
Wow. We need a prediction. We need a little bit of a noise for that.
It'll pivot.
An ominous noise.
I mean, everyone uses ChatGPT now.
Yeah.
Even though Chat apparently is 5 times more energy intensive than, maybe it's 5 or 10 times more energy intensive than Google. Like we're wasting a lot of energy using chat
Yeah.
for simple tasks, but it does. I don't know that view came from other experts, not just from me. But
you're out there just got to like,
it kind of makes
I don't even know what
sense.
you call it. Something measuring the emissions outside Google headquarters.
I think it's 10 times. And the same with search. But search came out of nowhere and phone books disappeared. It doesn't mean there's going to be a problem with Google. Google's going to evolve, and they've already got a kind of Gemini. Yeah,
Yep.
They've already got their own version of chat that's going to be integrated and just become slightly different.
Yeah,
like Google Lens. Have you seen that?
Where you can scrub things.
That is amazing. You could do that tree, that plant behind you. Sorry, not tree.
Fig.
Indoor plant. Yeah, fig. Yeah, fiddle leaf. Fig
yeah,
leaf.
it is. Yeah. Thank you.
But you can scan. I can scan your glasses right now and find out where to buy them.
Yeah,
that's the evolution of Google as well. I don't think chat's going to be able to do that yet.
It's interesting. Yeah, it is. It is very interesting. Like I have the premium ChatGPT app on my phone, mostly just so I can work while I drive.
You just talk to chat.
I do, and normally it would make this noise, like it'd make this echoing noise, like dum dum while it was thinking. Like in the past, you would ask ChatGPT a question via voice. You'd be like, "Hey, what's Drew Meredith's prediction for 2025 in interest rates?" And it'd be like, "Don't know who that is, but I do know who Dr. Andrew Dermott is." And you would do that, but then what I've noticed now, in the past, it would wait a few seconds before it would have to like buffer and make a decision. Now it responds before you finish your sentence.
Yeah,
it is crazy.
Amazing.
It's just incredibly like responsive.
Yeah.
And I remember hearing a podcast recently where the host talked about their kids being 7 and 9, and the kids not using Google search. They didn't know properly how to use it.
Yeah.
So they just used GPT, and they would just be like, I don't know, how hot's it going to be today? They wouldn't search it. They would just pull it up in ChatGPT.
Yeah.
So that, I don't know, that I think that has implications.
Yeah, I mean, but this is the benefit of investing in companies like Google and Apple. They're not going to sit on their hands. They're evolving as we go, and as we speak, they're evolving and putting all kinds of new technologies together. So maybe ads are delivered a different way. Maybe you can influence chat by having ads that directed to your website, or there'll always be a way to monetize it.
I guess in the end, everything's advertising.
Yeah, pretty much. Just trying to get you to buy stuff.
Yeah, you're either in marketing or you're in engineering.
And apparently that's
like
Trump's election has been positive in the short term for consumption. People's consumption preferences for some reason.
It's been like 36 hours. What do you mean?
That's what I mean. I was reading a piece from a fund manager this morning.
So they're just like, what? So they're just going to go out and eat like 10% more cheese than they did 2 days ago.
I mean, it turned its sentiment.
By the way, that's not what
for the people
about consumption.
I guess the people that voted for Trump, not anyone else.
Yeah. Okay.
But you should think that, because if your tax rate's being cut, that like you naturally you can have more after-tax money. And then you've had an interest rate cut at the same time. I love that they cut rates on the day after the election, not before.
Yeah.
That's
well, you could interpret that one of two ways.
Reserve Bank's independent.
You could say that they are pro-Trump.
Yeah.
Because
they've done it as soon as he started.
And then Trump's got all this stimulus that can come through, and it makes life easier.
Yeah.
Or you could interpret it the other way, that they shouldn't have done anything until the election to avoid bias.
Yeah.
Heads you lose, tails you lose.
Why does it matter?
Well, yeah, they shouldn't.
Well, that's not.
But they live in an economic reality, I hope, in that they also understand that they can't. Their decision has consequences for how people think. We call it on the Australian Investors podcast. We call it the zeitgeist. The investors zeitgeist.
We're clearly in touch with the zeitgeist. Is that how it works? Yeah.
We're just in tune. Yeah. Speaking of, we do have a new coffee machine here in the office. It's Oz Pure. You can get it on Amazon for $59. Don't waste money on one of those DeLonghi things. In other news this week,
Smeg, actually.
Smeg. Yeah, no. Other news this week, banks doing things.
He had 2 profit results. There might have been another one, but ANZ and NAB both reported this week. Profits lower. I think both banks reported 8% fall in profit. Still managed $7 billion for NAB and $6.7 billion for ANZ, which they will pay tax on, as banks do, as every company does if they don't have carried forward losses. Interesting takeaways were arrears are increasing and hardship applications. So for those people struggling with their mortgage, those for NAB arrears were significantly higher at
Mhm.
1.4% of all loans. Net interest margin NIMs were
Nimmies.
quite flat,
Yep.
so about 1.6%, slightly improved for ANZ, but that's not a massive profit margin you've got there. And then interest in most ANZ's grown market share and probably now growing quicker than the others, which the others all outgrew ANZ for the last 3 to 5 years. I got a notification on my phone this morning reporting that ANZ cut their dividend from 83. I think it was from.
You didn't like that.
No, it was 94 cents last year to 81 to 83 this year. But
Yep.
last year they paid a one-off special dividend of 13 cents. So you can't really, in my view, removing a special dividend from the previous year, you can't say it's a cut when it's actually increased by 1 cent.
Yeah.
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 We love clickbait.
Yeah. I mean, yeah. Would you buy NAB or would you buy ANZ shares?
I still prefer NAB at the moment. I think ANZ's it's only 70% franked because they still have overseas operations, and NAB business banking. Even though they've lost a little bit of market share, they still win and are incredibly good at business banking. We bank with them for our business as well, as well as Macquarie.
Yeah, they are good at
Would
business
you?
banking. I'd buy NAB.
Yeah,
I don't know. I just feel like ANZ's a bit of a wallaroo, as they say, Drew.
What's a wallaroo?
I don't know.
Is that the port?
I feel like it's some type of animal. Let me just bring this up.
Wallaroo.
Wallaroo. Someone's going to write in. No, it's a town in South Australia.
Yeah, it's a port. And there's still no. I was like, where did this even come from? There's still no rate cut in Australia.
Yeah,
I'm getting nervous. I'm stockpiling books for next year. It just doesn't make sense. We've got one more meeting this year.
Yep. There will be a rate cut.
Like, it's clear there's still issues. Like, you've got arrears going up from the banks. You've got employment struggling. You've got spending struggling. And every other place in the world is cutting rates, but Australia isn't budging.
Yeah, Monique, can you bring this up on the screen here? Just showing the
chart on.
Just chart crime here, just showing the implied yield, Drew. And by this time next year, November 2025, the implied yield is 3.91, so just under 4. So effectively, the market is pricing in 2 rate cuts in 1 year.
Yeah.
And you're suggesting that unless rates are cut by March, you're going to have to send every listener of the Australian Investors podcast a copy of your book.
Yeah.
Which, to be honest, based at 4.2% of the implied yield, it's not looking good for you, Drew.
Yeah,
the market is kind of
to get the geared
probably not even
fund
halfway there.
For it.
So that'll be fun for you. That's right. It's just a trip to Demics.
Just back up the truck.
Yeah. But okay. Chance of a rate cut at the next meeting, say before Christmas.
Greater than 50%.
Greater than 50%.
Yeah.
I think I would probably agree with that.
Yeah. There's so much pain and struggle out there.
Yeah.
Like even, maybe it's not a good reflection, but at Flemington, the amount of people, not the gambling or anything, but actually the amount of people there, like if you've been there in 10 years, like it would be struggle to walk through, struggle to find room, and it is sparse. Like it was quite sparse yesterday. Even on records at Derby Day, which is the first Derby Day, depending where you're from, we're like 115,000 people in the late 2000s, and now it's capping out at like 75 or 80.
Yeah, I mean,
just attendance,
correlation, causation. I think I agree that
but
I think
doing less of those things.
For those people that don't know, the Melbourne Cup, biggest race in Australia, is
the race stops
not
the
that
nation.
The race stops the nation. What a saying! What an absolute! Who come up with that slogan?
It only stops Melbourne because we have the day off,
and it makes traffic absolutely hellish around north and western Melbourne. It is near Brunswick, and apparently I have some intel from the hipster capital of Australia that there was a bit of a no race campaign going on as well. So
always,
always. Anyway, the Australian dollar has spiked a little bit.
It did.
Yeah, it's up. It's up to around 66.7 cents, according to the Honourable Google Finance, which would suggest that if we keep rates where we are, with the US still cutting, it would potentially imply that maybe Geez, look at potentially maybe, perhaps it could happen.
A strengthening of the AUD.
The AUD.
Yeah.
We will see a spike in the big AUD.
It's still stayed in this range of 66, 67 cents for a month now.
Yeah, it's what we would call range bound, wouldn't we?
Yeah, got as high as 70.
Yeah. Insights.
Barely.
Hedged or unhedged, Drew? Or
Unhedged still.
okay.
Yeah.
Interesting. So we got some questions sent through. Some good ones, some tricky ones, some easier ones. So there are some very interesting questions. Why don't we start with this one with Bobby Axelrod?
I love Bobby Axelrod.
Bobby
Reference to
Axelrod,
Billions TV show.
Fan of the show. Man, can we bring this up?
Also watching The Diplomat at the moment.
Bobby, they're not bad.
Great TV show.
Yeah. Very good. This is Bobby Axelrod for folks that are watching at home. Who's it played by?
The redhead guy from Homeland.
Damien Lewis.
Yeah.
Yeah, there you go. Yeah. So I'm pretty sure he plays like the hedge fund billionaire.
Yeah. Lead character.
Yeah. Stan actually was the very first sponsor we ever had on our podcast.
Really?
I believe. Yeah. And because they wanted to, what's the correct
Billions.
term?
They wanted to push billions.
They wanted to flog billions. So I was like, well, I'm not taking that sponsorship until I watch it. I was like, ain't bad. Once again, it's pretty dodgy stuff going on in finance. I can cop that, but yeah. Anyway, how Daniel Loeb, the real Bobby Axelrod, made his Wall Street something or other. That's Sown Hearts and Minds. Anyway, Bobby Axelrod writes in and says, I am looking for a set and forget small cap fund that I can dollar cost average into part of my core portfolio. You have mentioned before that an active small cap fund is generally preferred to a passive index style fund. Is there any passive index small cap fund or funds that are worth looking into? Would something like QSML be suitable for this sort of allocation? Now, before we get into this, I will say that we can only offer general financial information on the Australian Investors Podcast. Anything that we say, do, or act out or gesticulate is strictly limited to general information because we don't know your needs, goals, or objectives. So be sure to speak to a financial planner like, say, Drew, or anyone that you can verify on the moneysmart.gov.au website before acting on the information that we present. There is also things called a product disclosure statement, or there are, and things like target market determination.
TMDs.
You can find that on the ETF provider's website in this case. So the ETF that is being asked about, Drew, is the Van Eck MSCI or MSCI International Small Companies Quality ETF. Invest in 150 of the world's highest quality small caps based on return on equity, earning stability, and low financial leverage with the QSML ETF. Interestingly, Van Eck is also the provider of the International Quality ETF, QUAR, which is super popular.
Yeah.
And it's large cap, but this is a small cap variation.
Yeah, I mean, we like, as the question said, we like active management in small caps because it's an under-researched and there's more opportunities for competitive advantage. And then history shown, so the S&P research house will show that there's a vast, I think it's almost a majority, or there's a much higher number of active managers outperform the index in small caps. But if I'm investing in small caps, I actually like, I don't know if it's actually a global fund. Is it the Invesco?
The Australian small companies.
So I find the problem with the index is you end up with sector weightings. That's why we kind of like, or sector overweighting, same as you do in the large cap index. So, and particularly in Australia, I mean, overseas is quite different. In Australia, we're not massive fans because you end up with a lot of mining. And then I kind of go, if I'm not going active, then I just try and go as simple as possible. Because if you, something like QSML, I think it's a reasonable product. It's 60 basis points and it's kind of forward looking but backward looking. So I'm more like, if you're getting a pure exposure, get a pure index exposure.
Yeah.
And then add an active and use that. You'd end up with actually a very similar all-round fee if you combine a passive and an active compared to holding this, which is kind of a combination of both. Not that it's a bad product or anything.
Yeah, you've got what's Fairlight? You've got
Ausbil. We've used
Ausbil. Well, I'm just trying to think who else.
Munro.
Chalmar.
Yeah. At Munro, that's been a growth small cap fund.
I don't know if the small cap fund
Ned
is
Bell,
listed.
if you've interviewed him.
Is the small cap fund listed from?
I don't think it's not yet.
Okay, right.
Yeah.
Because I got some listed funds.
Yeah.
There are quite a few good global small cap fund managers. I think Fairlight's pretty big now, but it just I guess it just depends on the expression as well. Like I
What you
agree
want,
with everything that you said. Like if you're going for growth, is there a different way to get growth? You don't have to invest in small caps just because you can. It's not necessarily something you have to do. Um, I think for Aussie small caps, you want active. You definitely do not want passive for pure small caps in Australia. Just it's impossible. Global small caps, it also depends on how they define it. So I'm just here on the
Russell 2000.
QSML landing page, and I might just try and find the performance has been exceptionally good over the last 12 months, but it's quite short term.
So I don't mind BlackRock.
Just trying to find what kind of companies are in here.
IJR.
What are you reeling off over there?
BlackRock has iShares Core S&P small cap ETF.
Right, okay.
And if you think about this, so that's 0.06% you're paying for that. And say you're paying 1% to a active manager. If you core satellite, if you do 50-50, your blended fee is going to be something like 53.53%. And it's about the same cost as buying QSML by blending the two.
That's what people are still catching up on, just with a bit of quick math, is that you can blend two things together with the same amount of capital and have a lower fee but get a better exposure.
Yeah.
But I can just see it here on the fact sheet from QSML. The average weighted market cap is 12.3 billion over the last 12 months. So that's the average size of the companies. And the problem that you may have with some ETFs, so I would look at this if you're looking at a passive version, is what they might call small companies to you might not be small companies. So you might have an active fund that has an average size of the company that they're invested in of, I don't know, what would be reasonable, say 5 billion or less, because they can be more tactical in how they place their trades, the types of companies they look at. Whereas an index strategy has to just buy what's in the index.
Liquidity.
So that's something to keep in mind. Roman on YouTube says small cap value is where it's at. Interesting, Roman. Heath also said, Heath Moss, friend of the show, great beachside town here in SA. I think he's talking about Wallaroo. Yeah.
Near a big grain growing area there.
Yeah,
I'm
true.
sure you still got on the map there.
Oh, a lot of grain. That's a good question though. I think the Invesco chat we had with Scott Bennett recently was really good, actually.
Yeah.
The systematic small cap fund.
Yeah, and the idea of that's being that every index has its own kind of biases, and small caps in Australia end up being mining, because if you just by sheer numbers, you can have more mining companies and explorers. So it's more like, how do you limit those biases using data rather than through active stock picking? And that's why I found it interesting. Like you could use that as a core with an active satellite next to it as well.
Heath says he likes QSML due to the quality filter. 60% of the Russell is unprofitable, so it filters out some of the poorer performers.
Yeah.
Good point. Really good point. We had some more questions sent through. Nonna writes in, I think this is the real name. Which would be a better choice for grandchildren over 20 years, they say?
Just for Trump's kids' inheritance.
Number 1, investment bond, choosing VDGR, or 2, Vanguard Kids VDHG in adult name as trustee and tax rate at 30%. That's a very tangly question in multiple regards. Let's pull that up. I would just put this down. I'm going to generalize the question.
It's very specific.
How would you...
Do not act on what we say.
How would you invest for kids?
It depends.
Yeah, we need a hat for that.
Yeah, it depends on and there will be some merch coming for anyone listening. We're working on some merch. AS Color, great brand.
Great brand. AS Color, thank you.
Just need a screen printing. If anyone knows a screen printer, please reach out.
Yeah, screen printer on demand.
Yeah.
I would really appreciate that as well.
Excellent. For investing for children, I'm kind of very simple on this, and it's like, if you're growing your own wealth, you're investing on behalf of your children anyway. And sometimes to get to the point, it's more like just hold an investment on their behalf through your chosen entity. Don't do something too specific. Is why I've tended to go for it. Don't set up, as trustee 4, you end up being taxed on it anyway. And then there's usually gains when you transfer out of as trustee 4. So I set up if you've got a trust, have an investment that you've allocate to them. And I understand it's probably more about engaging them. If it's not engaging, then just invest your wealth and have in your mind, you're going to give this to them at some point.
Yeah.
But then it does, like when you're looking at structures, the more kind of fixed and disciplined it is, it's likely to be the best outcome for such a long period of time.
So there's probably like 3 major ones, I think.
Yeah.
There's like, if you've got a family trust, you could probably hold the assets in the trust.
Yeah. And they don't actually own it, but you can say it's theirs and invest it for them.
Yeah. You can hold it in the lower taxable income partner's name.
Yeah.
Or you don't. The third one would be probably an insurance bond or an investment bond,
or as trustee for someone.
Yeah, but there are limitations to that as well.
Yeah.
Like a lot of people talk about that. You put it in your name, hold it on behalf of kids. Like people can do that with us, and people are doing that with us, and you can do that. I think future proofing though would be more a family trust.
Yeah.
So in the past, for everyone that's listening, people used to use family trust to split income amongst family members. And they put in really severe rules that if you split income and it went to kids, it's called unearned income. And you could be taxed like 67% or something crazy on everything over not much. So the idea would be that kids don't get any income from any source of investment. You want to focus on growth-orientated investments that don't crystallize tax. But once again, there may be some tax. So I feel like index funds are still pretty sensible for people. I think, the old analogy of if you're on the plane, you put your own safety mask on before you've figured out. Yeah. I think that applies for most people.
Yeah.
I think if you're a grandparent, it's probably a little bit different.
Yeah.
Because you've got a situation where you probably don't need to worry about yourself and paying for the kids' school, all that sort of stuff. I would probably just set aside money and try and educate them more than actually worrying about the structure too much.
Yeah.
That's as much a sense. Investment bonds are really interesting. We're going to have Hacky on the show soon. So Grant Hackett. I have no eyes writes in. Now, I'm not going to laugh because this could be legitimate. I don't know how they wrote the question, but if they did, I'm very impressed. When is Drew's book coming to Audible?
I'm not sure. I don't even know how to get on Audible. Does that mean I have to read it out, or can I get AI to read it out? I'll probably fall asleep trying to read it.
Don't tell the people that, Drew.
Yeah.
This is actually an AI recording as well. We're not actually real. We're from the future.
We clearly are. It's a good question. I think I'll ask my publicist.
What?
I don't have a publicist. That just sounded like something important to say. I'll talk to the publishers and find out about that. It's not. I think it's coming around at Christmas time.
Stylist, anything that ends in is not great. I remember when someone wrote in a few weeks ago. They talked about your spa or jacuzzi, and they said must be nice.
Another stitch up, isn't it?
It's a proper stitch up.
Well, you do when you have a book. Someone finds like interviews and stuff for you.
It actually, it's true.
You've got one.
I do.
Yeah. You may not call it that, but I'll look into it. Would you like to read the book for us for Audible?
Yeah. You should get someone with a really deep voice.
You have a good face for radio, so it'd be perfect.
Damn it, this is on YouTube. Yeah, it's true though. It's true.
But that's the next step. I'm sure you have to pay for it too, so that's probably why we haven't done it. This is too expensive.
Maybe if I have no eyes, I have no eyes wants to read it out.
Yeah,
you could then record it.
Yeah, beautiful.
And then publish it. I don't know what the rules are around that, but
that'd be fun.
That could be interesting.
Definitely.
Yeah, but then if they don't have any eyes, how are they going to read it? Anyway, that's a good point. That's a really good point. Okay, so How Now Brown Trout writes in and says, "Hey guys, I currently hold US shares direct via CMC Markets stockbroking. My understanding is that direct US holdings aren't CHESS sponsored. How worried should I be if CMC goes broke with regards to redeeming value of US shares? What is the safest way to own shares in Australia?" I think that's the general question here. What is the safest way to own US shares in Australia? Are ETFs safer for indirect exposure from a security perspective? So I'm going to generalize this question again. Generally speaking, Drew, like you do a lot of investing for your clients overseas. Yeah. You do that through platforms.
We do.
How worried do you get about those platforms?
We're pretty old school, and we're not trading enough to be too worried about transaction costs. Yep. Like we're not going to be trading enough for brokerage, $10 brokerage. Exactly. So what we tend to do is just go with the incumbents and the biggest providers. We use a lot of so platforms like NetWealth, Hub24, CFS all offer the ability to buy international shares alongside Australian shares and with a custodian operating in Australia. So when it's a super fund, that's what we're using generally, and that's because they're advisor-initiated platforms. So we help our clients execute them. This is very different. This is where you're executing it yourself. I don't believe, I mean, it may not be registered via CHESS because that's an Australian system, but I know that pretty much every US shareholding will be held by a custodian. Even CMC, Pershing's a well-known custodian. I think they used to do ComSec or FinClear. I think is also Magellan owned. So I think the simple story would be going with bigger players. Don't be attracted to the low cost because that's where things like Robinhood happened. Not that people lost their money or weren't able to get their money out, but it's more about going with the size and security and ensuring they have a custodian.
Yeah, picking up pennies in front of steamrollers is like trying to choose the lowest cost brokerage.
Yeah,
in my opinion, I don't think that's the steamroller, by the way, could be the company collapsing. It could be just going into administration and taking you months to get your money back. It could be forcing you to sell your shares, so you have to get the tax bill. It could even be them flogging you other products that you think you're getting cheap brokerage, but on the other side, they're gouging in some other way, which they don't disclose as well. So I think in terms of most direct investors in Australia, I think choose your battles. If you want to be an individual stock picker, just be really good at that, and then let ETFs and financial advisor and managed funds deal with the rest of the stuff.
Yeah.
If you want to go and trade US shares directly, then just know how where your money's held, the custodian, their financial position, and also I would also check their SPIC insurance. So big in the United States, instead of having the CHESS system here, which all the brokers have to contribute to, and there's like funds and these types of things, in the US, they have to hold particular insurance.
Yeah.
And that covers beyond, they typically have coverage beyond the mandated level of insurance.
SEC or FINRA.
Yeah. So basically, you just want to go with established players. And I think in dealing with companies, no matter what it is when it comes to your money, know who owns the company.
Yeah.
So even if it's a big company, who owns it? For example, one of the guy that founded Interactive Brokers is on Forbes' rich list. He's one of the richest people in the world.
Yeah.
But his company is publicly listed. So if you're worried in any way about Interactive Brokers, you know that they're having to show their quarterly financials, having to get audited,
subject to SEC,
having to get SEC and have a public image. Like they have to defend it. But if you're going with some startup or some private company that you're not sure about, you want to tick all those boxes to make sure that, heck, if they go under, something's going to be okay here. Yeah. I just think that people have a short-term memory, or people that are new to investing don't really pay attention. Yeah, you might get free brokerage under a certain amount, but what is the bigger implication here of me doing this?
Yeah.
So for Australians, I like to know who owns the company that I'm dealing with. What is their security that they have in place? I think ETFs are just custodial models for everyone's understanding. They're custodial models. Your money goes into a pool that's in a custodial arrangement somewhere. Even if it's iShares or even if it's Vanguard, doesn't really matter. So I think most of it's really safe. I think ETFs are really well regulated. Just know who owns companies, I guess, is my takeaway from this. Okay, Drew, we've probably got time for one more question, just real quick. What have we got here? What should we do? Where are the show notes?
That's an easy question.
So broke down at a truck stop. Wrong directions are shown. We've had a few questions about our new rebrand that's happened at Rask. You'll see more changes. If you head to the Rask websites, you can head to raskmedia.com.au/podcasts, and there you will find all of the episodes that you can filter through. We're still working through the rollout of our new redesign. Who would have thought, Drew, that revamping a platform...
It's a massive job. I can already see a few areas that need to be updated.
Yeah, who would have thought? So bear with us for a week or so. We're still doing everything. We're calling for feedback. If you're in the community, you can give us feedback. You can spot broken links. You can change things. You can tell us what we need to do better, as well as give us what you actually want to see, because it really helps all of us. get to the bottom of things. Now, we'll be back next week. We'll have more time to answer questions next week. Thank you to everyone that joined us live for today's show on YouTube. We're trying to get better at that too. But Drew, you do owe us a dad joke, and I'm going to select the best question to name. And today, the best question to name, I think, has to be Bobby Axelrod.
Yeah.
Because they've taken the time out to really think about
early Rask days.
Yeah. Well, just even general.
Yeah.
Like, what's a name here? We did have another good one which we didn't read out, which came from Warren's breakfast buffet. As a play on words. If you
I didn't
had a
mind
question
wish
to
the
name,
doctor had been correct about rates. No spaces with capitals.
okay. If you're any one of these three people, Bobby Axelrod, Warren's breakfast buffet, or wish the doctor had been correct about interest rates,
And we'll get to that question next week.
we'll get to that question next week. Great question. Write into us. Use the instant support function on the websites and say, hey, I asked that question. And Drew will send you a copy of his book and we'll give you a Value Investor program for free. Drew, you do have to give us a dad joke to send us off.
I'm pumped for this one. Just found it. Credit to Reddit. That's where everything good comes from these days.
Including ChatGPT.
6:30 is my favorite time of day, hands down.
I had to think.
It was a slow burner, wasn't it? That was a good one. I like that. I'll take that.
That's a good one.
Yeah.
That's
you wouldn't see it on your fancy Apple Watch. So
fancy Apple Watch.
Does it change your face?
Change your face. The plot thickens. Well, Drew, this has been heaps of fun. If you want financial planning advice, head to the link in your show notes or wattlepartners.com.au. Specialists in retirement. I hear that Wattle Partners is extremely busy coming into the end of the year. So if you want to reach out to them, do it now. So if you're planning to plan your retirement in 2025, the time to reach out to the Wattle Partners team is here. Reach out now. Start the conversation with Drew and the team, Jamie. They'll be able to set you up with what we call a fact find and start the onboarding process before Christmas rolls around. It's going to be here before you know it. You want to start planning sooner rather than later. So you can head to the link in show notes or wattlepartners.com.au and get in touch with the team there. But Drew, it's always a pleasure. Thanks for venturing down to this side of the city. It's good to see you.
Enjoy the work. Good to see you.